I'm about to invest a big chunk of my savings into the stock market for the first time. That's something I've been putting off. Investing is a huge challenge, emotionally and intellectually, and I'm terrified at potentially losing my hard-earned money.
I spent my 20s laser-focused on my career and building my financial foundation. That meant comfortably covering all my expenses, paying off student debt, building my emergency savings, and taking advantage of my employer-sponsored retirement account. Now I've got a $45,000 cash reserve just sitting in the bank that I can invest, separate from my retirement fund, emergency savings, and wedding savings.
Now I have no more excuses to delay building wealth. That means learning how to make my money work for me instead of letting it sit and lose value in the bank due to inflation.
Knowing how to invest is more important than ever because a lot of what you need to do to reach your financial goals, like retire someday, is pretty much in your hands. Long gone are pensions and guaranteed streams of income that maybe older generations had to secure their retirement.
Not to mention, wage growth in the last 40 years has been negligible, lagging far behind inflation. But you can lose a lot of money from investing if you don't do it right.
I lost north of $35,000 within the first year and a half that I started investing. Yeah, so hopefully, Mom and Dad, if you're watching this, I have recovered that money.
Here's exactly how I got started, investing in the stock market.
Maximizing gains and minimizing risk is something Ankar Chugh, now a successful retail investor, learned the hard way. He lost over $35,000 in his early 20s.
I lost a lot of sleepless nights. I was eating, just bare bone food just to save the money to kind of come back, but it definitely was a catalyst in my life. I was motivated to not only get my money back, but learn what I did wrong.
That's like my worst nightmare, Why did you lose so much money?
You see all these people on social media that have become like millionaires overnight. All of a sudden you have these pipe dreams that I could do this too. The harsh reality is just that that's not possible. So I did all the wrong mistakes. I started day trading, back when I was in the 21, 22 years old. I used margin, it's very risky. I use a social media site called StockTwits to get my trade ideas. That's filled with thousands of people that have no experience or knowledge in investments and financials. I was just so in fantasy world, like in Narnia. And now I think I'm, at the bus stop. Which is fine because that bus is going far. If I hadn't lost that money, would I be where I am right now? I think for me, I wouldn't.
Chugh, who is now 30, says his investment returns have beat the S&P 500 by a considerable margin over the last 3 years. He invests in stocks, cryptocurrency, real estate, and startup companies.
What are you doing differently now that's working for you?
So it's just a matter of time of practice, ingraining the mentality of diversification, how to manage your risk, doing the homework, maintaining that level of diligence throughout your investment. So if your investment isn't doing well, you don't just throw in the towel, you have the know-how to watch it through.
What that tells me is I should stay away from highly speculative investments that I know little about.
They could perform well or lead to big losses. Instead, I'm going to spread my investing money across highly diversified assets, which I plan to hold for the long term, like index funds, ETFs, mutual funds, or target date funds, which are baskets of securities that diversify risk.
Of course, we all want to be rich, but slow and steady builds the race.
I chose more than 5 different ETFs with the help of Blue Ocean Global Wealth founder and CEO Margarita Chung. ETFs are diversified in and of themselves, but you can diversify even further by investing in different types of ETFs. For example, large cap ETFs invest in companies with a market cap of at least $10 billion. Think some of the largest, most stable companies in the US. Whereas emerging markets ETFs invest in small to large companies in certain developing countries. These stocks can nab you higher returns, but they're also riskier. That's why experts recommend allocating a smaller percentage of your portfolio to emerging markets.
There's times when small cap and emerging markets definitely outperform. In 2020, emerging markets were a little bit volatile because of the pandemic. The pandemic has hit the developing world harder than the developed world because of access to vaccine and so forth. But the benefit to having exposure to different asset classes, means that you have different investments behaving differently.
I'm investing 80% of my cash reserves in stocks and the other 20% in bonds, a debt security that pays interest. Bonds are a lot safer than stocks, but don't have the same growth potential.
I can afford to be more aggressive and put 80% of my cash reserves in stocks because I plan on holding these ETFs for 7 years or more.
You got a whole market cycle every 7 to 10 years. You have time to get in and out or recover. You don't have that when you're in that 1 to 5 year range there. You could get really punched at the end of it.
But it also means I shouldn't invest the money that I'm going to need in the next few years. I'm planning my wedding for next year and contributing about $7,000, which I'll keep in cash. I'll keep another $8,000 in cash, which will cover about 5 months of my living expenses. Experts recommend 3 to 6 months of emergency savings. Experts say you shouldn't invest all your money all at once. Instead, I'm doing something called dollar cost averaging. That means dividing my money into equal lump sums that I invest at regular intervals.
Experts say that helps to avoid going all in at the top of the market. I'm going to invest $1,000 a week, with each ETF in my portfolio getting a set percentage of that. With this investing plan, I feel confident carrying on with my life without thinking too much about my investments.
But I can't help but wonder,
Do you really feel that investing has actually helped you live a better life? Because what is the point of investing? Like, it's nice to accumulate all this stuff, sure, but like the ultimate point is to help you live a better life, right?
Some of the anxiety that comes with the grind is no longer there. I'm not worried about paying my mortgage tomorrow or paying my rent tomorrow. Before, I was worried about those things. Will I be able to help my parents as they grow older? Will I be able to spend time with people that I love and make memories with them? Or will I consistently staying put on this grind?
Chug says his investments are getting him closer to financial freedom. That's when passive income covers all your expenses, so you no longer have to work a job.
For me, learning how to invest has always felt like extra work that I don't want to do at the end of an already long workday. But ultimately, it's an investment in me and the things that I love to do outside of work.